Yeah, it all depends on what they're going to do, but it's there's not much to look forward to at the moment in the near future. Do you mean? I think after the cleansing and the big clear out and the big down movement, if we get one, then I think there's a lot to look forward to. But in the short term, not too sure there's much brightness on the horizon, really.
Yeah, that's more or less my assessment. I'm not in the camp where I think that we're heading to ultra bearish territory. I actually still think that there's non-trivial odds. So I don't know, something like 30, 40, maybe 50% odds that the bottom in terms of the price it could be in. I certainly wouldn't bet my life savings on that, but I posted this article here, which is again Arthur Hayes. He's just a fantastic writer. This is his most recent piece that came out, and what he basically describes. And I think this, as I was reading it last night, I pretty much fully agreed with it. The general gist that he's putting forward is that the whole Luna fiasco, if we actually think about what that was, we saw a major flush out of these stablecoin, and at the end of the day, what it was basically it was a flush out of speculative liquidity in a very, very significant way, right? So what we've essentially seen is the damage that would have otherwise happened later on in the cycle happened earlier than otherwise. So we kind of saw it get pulled forward in advance. Now, the reality of the situation is that, once you see that kind of major flush out of retail, if we think about it, how many retail folks got completely and utterly wiped out as a result of that? It would be very, very significant. So what his argument is that a lot of the pain, crypto tends to move before and faster than equities and the rest of it. And what his argument is that we kind of saw the damage get pulled forward by a number of months because, we obviously sold off with equities, not so. So that's his basic argument. I think it's an interesting one. I kind of agree with it. And what he's basically saying is that over the next 1 to 3 months, it's going to be pretty hairy. And we've seen that they've just started doing QT and all the rest of it. What we may not have seen, basically that's why I kind of argue that it's almost time pain. So the market's not out of the woods, but at some point they're going to have to do a pivot, right? And the reality is that they're trying to fight the inflationary side of things. Inflation is the number one issue. But at some point in time, and there's a lot of warning signs of this, recession is going to be the bigger pain. Now, the problem is that we actually have to dip our toes into recession because, central banks tend to be behind the curve. So we kind of have to have the recessionary drop in before we step back and move back into the, kind of the crazy monetary stimulus realm. And again, I'm not a huge fan of having to sit here and wait for monetary debasement for these things, but this is kind of how these cycles go. Whatever the mechanism is, there's always some kind of driving factor. But at the end of the day, the system is built on leverage. The bond market is a purely leverage-based system. There's a lot of it. And the only way that they can pay that off, essentially, is with printed money. So there will come a turning point when inflation swaps to deflation and, inflation becomes a recession and the pain will switch over. But arguably, that's not yet. However, what Arthur's basically arguing is that the crypto market's already seen a lot of the flush out. It's kind of ahead of the curve. And now we just start forming a basing pattern and we're more likely to be in that type of regime, the sideways, the time pain, the not really getting anywhere, the boredom. That probably feels more probable than the, some kind of major continuation to the downside. So anyway, that's certainly an interesting perspective. And I definitely align with it on a lot of fronts.
Yeah, that's interesting because, I sort of tend to, I'm keeping them very separately in my mind, because I'm truly very, very bullish Bitcoin at this stage. So I look at Luna as a very positive event. I think it's sort of like flushed out all the stuff, got things out of the way. And the way that the market handled, 40 billion, or some people are talking 80 billion. I don't know where they get the figures from, but the way that they handled that sort of flush out was incredible. Look at it. I think it just is a good sign that BTC is super strong. But at the same time, I don't think that it's more the macro that I'm worried about. I'm like, in my head, I'm like, I've got no doubts about Bitcoin. Even what's happened recently has made it even more stronger in my head of, how it will hold up. I just think short term, it's the macro is the only thing that I'm worried about, traditional markets. And I just knowing that, what we saw for that COVID flush when, people don't sell what they want to keep, they sell what they have to sell quickly. And because BTC is a very liquid asset, it will get the first to be sold. And I just think there's going to be too many of those, hedge funds that've got them on the books. And when they get margin calls start knocking and coming, the first thing they're going to have to sell is Bitcoin now. That will only just incentivize me to buy. I won't. I don't look at that as a negative, but I just think that it all is an event that's coming. And when it does come, fantastic for me because it will give me an opportunity to put some cash in at a lower price. But there's no way is there any reflection on crypto. I'm not bearish crypto at all. I'm just only bearish on the macro outlook ahead I think that they really want to. I think they want to cause pain to the equity markets. I think they want to sort of squeeze it more. I do think, another thing as well. To me, the equity markets are still hugely overvalued. I know they've dropped, a big percentage in their terms, but all these things are just stupid money. Do you know what I mean? I think, someone I was on a pod, I think it was Lawrence Leopold. I quite like him actually. I think he was talking about that they were modeling Tesla shares or something, a while ago, and they had Tesla shares really a true value should be under $100. And what it's trading, I don't know, but I think he said at the time it was like 600 or something. So whenever this podcast was, so they are still hugely overvalued equity. But on the flip side of that, Bitcoin to me is super cheap. So if the equity markets brings Bitcoin price down only on forced margin calls, fantastic. But to me, Bitcoin is super strong, and I'm totally bullish on crypto itself.
Yeah, I mean, and that's that is the reality of the situation. Is that we do have to be very aware that some kind of a flush out like that can absolutely happen. And it's one of those cases where liquidity becomes tight, and that is kind of the regime we're heading into. And we've kind of only seen Act 1 of this, of them raising rates to, was it 0.75? They are going to keep pushing them higher because they have to be firm on inflation. They are starting QT. I think yesterday was the first day where they actually started allowing runoff of their balance sheet. I think it's 45 billion or something a month out till September, and then it's supposed to double to 90 something. Now, how long they can go along with this, I don't know. That's kind of the multi-trillion dollar question. In many regards, you're absolutely right that equities still remain very, very overvalued. And I actually heard I forget which podcast it was, but there was one where they were talking about the mechanism behind this, why this is. And the general gist is that most of the time, through most of stock market history, the market would value things based on their earnings. So, if you have X amount of earnings, you do your discounted cash flow and all that kind of thing, and they model out what the value of the stock is, right, and look into the future. And basically they were saying something on the order of like 70% of the valuation should be based on earnings and 30% should be based on the growth multiples, right? So what we've now seen is that really since 2008, but particularly 2020, the market started trading not on earnings, but on multiples. So it kind of switched that equation from 70% earnings to 70% growth multiples. Now, the problem is that when inflation strikes and rears its ugly head, all of these companies need to suddenly justify their valuation. And the only way you can really justify valuations is with some kind of earnings and revenue. Now, the problem is that your revenue during an inflationary regime is going to be strapped because, inflation is going to take a bite out of your expenses, which means you're going to have less free cash flow, and then you've got to raise prices, and then you have less customers, and, the whole game that inflation plays on people and the economy, that starts to play into the mix. So we're now seeing basically a write-down or a markdown, not only of just companies that blew up in the bubble, but then they have to go through the process of correcting back to a 70 earnings, 30 growth multiple type arrangement. So you're right that we probably have only seen the first leg of this thing. We also have the central bank that, the reality is that they do want to engineer a recession. As strange as that sounds, and it really does kind of go with the strange times that we all live in, but that is essentially what they're trying to do. They are, in fact, trying to engineer a recession because, quite frankly, there's no other way they can stop the inflation boat. And the reason that is it kind of makes sense when you think about it. Everything is a supply and demand balance, and they can't print oil. They can't print goods and services. They can't print things. They can print money, but that's going to cause inflation. So, they can't print the supply side of the equation. The only thing they can do is destroy demand. So they can really only impact one side of it. And the only way they can destroy demand is by making, reverse wealth effect. Unfortunately, the loss of jobs and all the rest of it. I'm sure many of you, I spoke to some of my friends and family back home in Australia, and they're already feeling the pinch of inflation. The Australian government's trying to tell us that inflation is 3%, 5%, which, people are saying that I'm back to paycheck, and, things are costing me, 150%. I think power prices have gone up in the last 12 months. So all of these things are starting to anecdotally happen. Cafes are starting to close. This is very early in the innings, but it kind of shows that there is this weakness out there. And unfortunately, they say, what's the term? Don't fight the Fed. Well, at the moment, the Fed wants down. So it is one of those things to just be extremely careful. Understand where your risk is. We have some time before we're out of this bear. What I do believe, though, as Crypto Knight said, that when we do get this flush out, at some point this pain of deflation, and realistically, the central banks have been fighting this deflationary monster forever, right? Since early 1900s. This has essentially been their mandate, is to try and never have 1929 again. So when 1929 comes knocking, what do we think they're going to do? Right? Austerity is not going to happen. Could you imagine the United States government telling everybody to tighten their belts and to stop spending money? And I think Luke Groman summed it up nicely on Grant Williams' podcast recently. He's like, do you expect the US government to stop spending $800 billion on the military and drop that down to 100? Do they expect to sell to all the boomers? Yeah, you're going to have to take a 60% pay cut in your pension. And by the way, next year it's actually going to be an 80% pay cut. The votes just simply won't flow in when that happens. So austerity is just not on the agenda. It's just not going to happen. The probability of it is so close to zero that you can consider it a non-issue. So the only other option they have is to print the money, right? And this is at the same time that the demand for US government bonds could potentially be at its lowest because international buyers are leaving the fray. Pension funds are essentially up full to the gills. There's just no one else left to buy. The Fed is the only one with the bankroll big enough to actually absorb this supply. Nevertheless, even though that's the reality of the situation, they are selling bonds right now. So, it's one of those things where it's like, why would anybody buy a bond when the previous unlimited buyer is now an unlimited seller, essentially? The logic doesn't make sense. So anyway, the net result of this is going to be liquidity dries up out of the system. It's going to be a hairy period of time. It is extremely uncertain. But bring it back to the original point, as Crypto Knight said, when we do get this flush out and, anything below where we currently are, to me, really just feels like a generational level. Now, the important part is that you need to be able to weather the time pain because, it's not the time to be going all in on leverage and all that kind of thing. This is the time to get high value hodl stack buys. It's not the time to be taking too much risk because we simply don't know how bad this can get. We simply don't know how long it's going to be bad. We know the general long-term perspective that it's probably going to rotate back to the upside, but we just have to it's a game of survival at this point in time. You want to get through this time pain because it can be brutal, but it's also an opportunity for those who are prepared and willing to weather a bit of damage.
Yeah, I totally agree with everything you said there, Jermaine. And the thing is that it sort of ties in really with you've got the Fed, if you believe what they're saying, is that they're saying that they're not really going to pivot until they see jobs being lost in the form of a recession. So, and that, like you say, that data is very lagging. Do you know what I mean? So it's a very lagged indicator. So, the big question is how far do they push it until, and what are they prepared to see break before they actually do the pivot, the Fed the pivot, basically, because once they do the pivot, I think that's a major rip signal for Bitcoin. So, if you can hang on forever, maybe that's September, maybe that's after the midterms, maybe beginning of next year, who knows? But once they do signal that pivot, I think that is for me, that's a massive buy signal for Bitcoin.
Yeah, no, absolutely. And, the reality of the situation is that there's going to be smarter people out there with bigger models and bigger computers than us that are going to know when that pivot's coming. It's one of those things that maybe it's a capitulation event. Maybe it's going to be one of those things where it's just kind of a slow drip down. And then, it's that age-old saying and reality that in markets that you simply don't know the bottom is in until long after the fact. It's very possible that we see some kind of just drip down and then it slowly starts to recover. And the reason it's recovering is because some of those folks who are, on the inside and understand how these games are played have started their accumulation and picking things back up. Which is essentially why for people who are, essentially in our position, the advantage comes from, knowing when undervalue is kicking in, knowing what your time horizon is. There are so many models that we have, whether it's Mayer multiple, whether it's, any moving average model you want to look at, MVRV, all of these things are all signaling that we're in fairly discount territory. And it's been a pretty horrific bear, just in terms of, maybe not in terms of price down, but certainly in terms of financial pain inflicted, it is significant. So, there is value down here. There will be a reversal at some point in time because, as Greg Foss would say, it really is just math. They don't have a path out of this. I'm constantly trying to reassess my thesis. And again, this is such a crazy macro time to be, let's face it, this is probably for me my first proper market cycle where I'm coming in with enough information that I can actually dissect it and digest it. And I'm still learning all the time, right? So, granted, I was aware that the tightening cycle was going to come, but what I didn't know what to do is how you actually react in that. What's the market going to do? What's the most likely scenario? And, we're kind of watching this game where the central bank created this monster of inflation, and then in order to fight it, they need to create the other monster that they've been fighting forever, which is deflation and a recession. And then the response to that, most people are aware, is probably going to be to print money. So, but you still have to go through the act. You know what I mean? Like, it's a very strange reality where the market kind of knows where this goes, and yet we still have to all go through the motions, right? And I've heard a lot of analysts talking about this current equity sell-off, and they're like, it's angry. I think they were saying that this is the worst start to a year since like 1788. I mean, I'm sorry, but when you got to go look back at 1788, it's the worst in history. I mean, what the hell does 1788 have anything to do with right now? When you've got to look back that far, it's the worst that's ever happened. I mean, let's face it. So what's interesting is you've got this sell-off, which is the worst in history, and yet people are saying it's very orderly. And when you look at the S&P 500, it does look orderly. It's a very structured downtrend. It's persistent, but it's very structured. So when you kind of look at this, it's like, is that because there's a whole lot of people who are like still stepping in and buying the dip because they're kind of front running the eventual rally that's coming? Does that mean that they need to get flushed out or capitulate? Like, it's a really strange market because we kind of know where it's going to go. But in many ways, and I think this is something that I'm certainly still coming to terms with, when I listen to a lot of these analysts who are, arguably ahead of the curve, they're the contrarians and whatever else, you hear them talk about the rest of Wall Street. And my understanding, if I understand correctly, the Luke Gromans and the Lynn Aldens and these guys, they are actually the smart money. And what you don't realize is that most of Wall Street is actually like all the plebs that you see on Twitter. They're so clueless and they literally don't understand that they're probably going to have to debase money. There's a huge portion of Wall Street that simply doesn't believe it. They're only just getting off the inflationary transitory wagon. So this is something that I'm still coming to terms with, is that Wall Street is in fact full of these plebs and they look just like retail. They behave like retail. And the world needs to shake these people out, even though they're institutional in size. And, I think I heard someone say that, hedge funds are basically the dumb money of the industry. These are just very strange concepts because you generally assume that Wall Street and all these institutions are actually the smart money, but in many instances, most of them are actually the dumb money, and they have to get flushed out and capitulate just the same as retail does, and we've seen this in past crypto cycles. So anyway, very interesting times. Certainly the right time to be kind of bunkering down and just being very sensible, but being very strategic. I still remain very structurally bearish on altcoins. When I see Cardano rally 10 cents, that's a bad sign to me, because it really should be trading at 10 cents, not trading up 10 cents. So, we have to go through that process of the complete speculative flush out. NFTs probably need to go through some horrendous bear. A lot of people believe that the merge is going to save ETH. I'm not so convinced. It'll be interesting to see. It's definitely a supply squeeze, but we do just have to see how that plays out. There's just a lot of risks in play. As I mentioned, I think it was in the last call. Maybe we did or didn't talk about this. Let me know. But I still remain very unconvinced. I'm a very displeased stakeholder in ETH. After listening to that podcast on Uncommon Core, it certainly didn't fill me with what I would call confidence that the devs know what's going on. In fact, quite the opposite. It convinced me that they actually don't know what they're doing in many regards, and they have no solutions for the 10-year roadmap for problems that could, in fact, kill ETH. And they say in the podcast, if we make one wrong step, we could seriously blow this thing up forever. And I just flash back to all the times that ETH maxis have told me that Bitcoin will be dead in 10 years because of the halving. And here's your core devs saying that we could be dead if we make a mistake. It's like, yeah, I'll take the halving if that's okay. But anyway, it's a very interesting market. I'm not bullish on alts, with the exception of Monero. Strangely, you may have seen the chart. That thing looks like it's ready to rock and roll. I don't know whether it's going to have a run, but I'll tell you what. I mean, that chart looks like it's primed and ready at the very least against BTC. And sometimes in markets like this, you all know the meme with Arnold Schwarzenegger where he's like, there's a pump out there somewhere. Sometimes that's just what happens, right? You get this one asset, maybe a sector that just happens to be where capital rotates into, and the market will find some narrative or reason why that's the case. But anyway, that's probably the one that seems to be looking pretty smick at the moment. But outside that, I'm not bullish on alts for many reasons.
Yeah, I totally agree. And also, I've been looking at the chart of Monero because it got down to about $100, and now it's gone up to about 200. Went up to about $200. So it's pretty much doubled in price, while Bitcoin's just been bobbing around from 25 back to 20, to 32. So yeah, you would have been better off buying Monero. And when I see Monero pumping like that, I can only think that people sort of like really are hedging their bets on the privacy side of things. So that just gives me a very bullish thought that, okay, they don't understand, or there's not so many people aware of Decred. But to me, it means that there's a lot of growth there. If Monero is pumped for that reason, then Decred will when the markets understand that. So I'm quite bullish on that. Do you see the same on the correlation between that and Decred and price evaluation soon?
We will have to see. I mean, I agree with you that I think there's another one for Monero as well, that they're just about to come into their tail emission. So basically, a Monero has a 0.6 XMR issuance every 2.5 minutes at terminal velocity. And I believe that in a couple of days, I think it's actually like very, very imminent. Basically, it's like reaching the final not inflation rate, the final issuance rate of 0.6. So the way Monero works is it has a decaying issuance, so like a halving event, but I think it might even be every block. I'm not sure if they have windows. I actually think it might be every block, the amount that gets issued reduces. But anyway, it's like a decaying curve until it gets to a point where it's just linear. So it's now 0.6 forever. Now, what that means is because you have a linear inflation issuance rate, so 0.6 every 2.5 minutes, as the supply grows, the inflation rate will continue to decay towards zero, because you're now issuing 0.6 into 18.6 million, and then you'll be 0.6 into 18.9 and 20 and 50 million, right? So eventually the supply gets so big that it keeps basically mining, and there's so little relative to the stock. So the stock to flow continues to rise. So I think that might be part of it, that it's kind of reaching that supply dynamic. You could argue that maybe that's actually a bull case for Ethereum as well, And you could then further argue that that could be a bull case for, yeah, Monero does have infinite supply, Dom. So it does have infinite, but the inflation rate essentially asymptotically trends towards zero. But anyway, what we're seeing here is that Monero reaching that, it's obviously got the privacy layer, reaching that kind of terminal velocity of supply. You could argue if it is supply based, and this is like reaching that limited level of sell side, so to speak, you could argue that might be an argument for Ethereum. You could then further argue that could be an argument for Decred, because they've obviously had the what's it called, the consensus vote that now has most of the coins going to stakers. We will have to see. I don't know what the I don't know what the fundamental reason behind why Monero would be catching a bid. To answer your question, Jax, I've always been a fan of Monero. I don't hold it very often. However, I am now, because I've always said I need to just own a couple of them, right? I need to have an allocation. I just stick it in cold storage. This to me is my signal to say, when I look at a chart like that on the weekly, this is my sign to say, okay, I've been putting this off forever. I've been playing around with, buying corn all the time. This is my chance where I'm like, all right, I'm just going to buy my allocation that I've always wanted, a certain number of coins, and just stick them in a vault, right? That's it. That's the end of it. So I normally buy Monero and then I end up selling it and doing something else. But at this point in time, this will be a buy and hold for forever. And look, the reality is that I don't have a high conviction that Monero or even DCR will be able to achieve a store of value status. I think it's a low probability bet simply because the market has not rewarded this in any way, shape or form. Now, we've also seen the world deteriorate quite significantly over recent years, right, in terms of government oversight and all that kind of thing. And you could argue that those two really are the only coins that can really stand up to that. Maybe you could put Zcash in that bucket, but I have a lot of questions with Zcash. But anyway, my view is that the world's getting a little bit scary from an authoritarian perspective, and to me, that's probably the argument. However, we know that Bitcoin's going to face headwinds in terms of privacy. We already know that they block, coin join transactions and things from exchanges. So therefore, when you look at something like Monero, the government's really going to make it very, very difficult for people to own it, use it, all of these different layers. Now, that's arguably a strength because, Monero is one that the IRS has put out a thing saying, let's if you can crack Monero and track it, we'll pay you a healthy bounty. No one's done this yet. So, it's under the eyes of the watchers. But the reality is does that mean do you need Bitcoin _TM? Does it need to become Bitcoin with an exclamation mark in order to actually achieve its goal? I don't know. I really don't. But, Monero really is a doom hedge, so to speak. And you could argue that Decred probably sits in that bucket as well. The risk, I would say, Crypto Night, with Decred in particular, is I have become increasingly, and I've seen more and more people coming around to this same idea. I've become very bearish on DAOs, and the primary reason that I'm bearish on DAOs is because having now worked in a small company as a startup, it's hard enough making damn decisions, let alone, giving anybody in the public a say. So when I think about that from that perspective, and you continue to see DAOs just not achieve their goals, I've said for many years that Decred's great on the technology front, and the devs are absolutely aligned with the project, but they really have the say, right? And there's no kind of distribution away from that as being the reality, right? The central folks who built Decred to get away from the central planning committee became the central planning committee. So these are just kind of some of the realities and of what I'm seeing. Again, supply squeeze is absolutely in play for DCR and maybe Monero and arguably ETH as well. But really bear markets are where shit projects die and all the good stuff floats to the top. So maybe we're starting to see that. I would love to see Decred really catch a bid. It needs to bloody market itself, but we'll see how that plays out.
Did you see that Fluffy Pony got charged today with 390 counts of fraud from South Africa? I think. So he's I think I don't think it's anything. Not sure if it's anything to do with Monero or anything. I think probably a previous company he was working for or something. I just saw headline flash, but yeah, that's I don't know if that's going to affect Monero at all or not, but bit of a bummer for him, isn't it?
Yeah, I don't think so. That's a real shame because I think it is some previous company who was involved in. That is a shame to hear because I don't think he's a bad dude. I have no idea about what he used to do in his previous days. I do believe he's been removed from Monero as a maintainer I don't think he's really involved anymore. So I don't think it affects the project in any way. But that is in terms of a personal thing, that's not a great place to be. And it sucks when these historical events, and I'm quite sure that if you asked him, he'd probably say I was a different person back then, whatever the circumstances were. And those things come back to bite you, which is it's a shame. But yeah, I did know there was something going on like that, so it's interesting to hear that that's kind of come to an head.
Yeah, apparently he was arrested on he was on a flight to Mexico to a conference or something in Bitcoin, and they landed in somewhere in America to refuel, and he got arrested there. So probably a forced landing. They sort of it's probably all planned up. Do you mean? But yeah, pretty bit of a bummer for him. Do you mean? So not good.
No, not at all. Are there any other topics or things that people wanted us to cover? We kind of covered the macro, how it impacts the current price. I mean, it's a bit of a challenge at the moment because you'll look at even riding the week on chain. I'm finding that it's just a very uninspiring market at the moment because it's just kind of down, red, and miserable. And when you look ahead, it's down, red, and miserable. So it's just kind of one of those interesting times. And again, what is it? 9 weekly candles in a row, which is weekly red candles, which is a first that's ever happened. So Solana blockchain being halted. I mean, does the thing ever operate? Look, this is just the reality. I met a couple of guys in Berlin who are Solana people. And my core takeaway, and again, they're non-representative. They're just a couple of guys with Solana, but they have absolutely no idea about how these things work. They don't understand decentralization. They don't understand nodes. To my view, Solana is doing exactly what it was programmed to do, like Luna. It's doing exactly what it was programmed to do. It's a ridiculous system. Just use AWS. There's absolutely no reason that you need a blockchain at that kind of magnitude. Just use a database. Just accept the reality. It's a token pumping machine. At the end of the day, that's what a lot of these things are. The trade-offs. Luna, what an absolute circus that's been. Talking about decentralized governance and blah, blah, blah. It's like, oh, come on. This is just Do Kwon going for his third bite of the cherry. I mean, anyone who thinks these things are decentralized and the community has a single skerrick of a say is just kidding themselves. But this shows you how gullible the masses really are, right? They can be told that you've got a token, therefore you get a say in these things. I saw something on the Optimism, right? Optimism dropped all of their tokens, and this is going to be very interesting to watch actually. So for context, Optimism and Arbitrum, they have horrendous usage. No one's using them. Just point blank, no one is using them not because they're not good technology. I don't know, but no one has any desire to use them. Now, Optimism has just released a token, and I've seen all the ETH heads tweeting about, look, Optimism's using the most gas out of any L2. It's like, of course it is. You just airdrop people a token. Of course, it's a casino. Of course they're going to start using it. Oh, look, it's burning the most gas on ETH. Of course. You created another casino token, and people are claiming it. Are you serious? And, I'm also seeing gas fees get down to 20 gwei, 15 gwei. And I just can't help but ask myself, I was sitting there drinking my coffee and I thought, do people not want to use their bank account in a bear? Why do people just stop using DeFi in a bear? Oh, that's right, because it's just used for speculating on tokens. If you remove the speculative bullshit leverage, most of these systems are completely unnecessary. So what does Solana do? If you look at Solana's transaction base, again, some of the guys at Glassnode have tried to actually run a Solana node just to see what it would take to actually implement as some kind of system. And they said that they literally couldn't sync the node. And 98% of the transactions are internal votes by validators. So, Solana can say that they've got all these transactions and look, we've got more transactions with Ethereum, but 98% of them are just transactions, and that's data that's being produced just to keep the blockchain running, which clearly doesn't work because it goes down all the time. So that's kind of the general gist. I really do think that a lot of these Soluna Vax meme coins are really going to have a hard time. And the hard reality is, what we saw with Luna, what did that take? 5 days to spin up Luna 2? Wait for next cycle, fellas, and all those Luna tokens and Solana tokens, you're going to be competing with whatever the next blockchain is, right? There's going to be a whole new season of shitcoins that show up, and they'll do the exact same thing, and we'll have 5 more EOS tokens from the previous cycle that will just disappear into zeroness. So this is kind of the reality of a bear market, the cyclicality of it. Lots of people question why this happens, but it's kind of bear market experience. You kind of have to see one before to understand exactly what the mechanics are, but altcoins can and will go down much, much further. It's just the hard reality of it. Don, what did you say? What if no one wants to buy MBS from the Fed? I mean, at the end of the day, if no one wants to buy MBS from the Fed, the housing market's going to implode, which is going to be a big one for Australia because that's just in a ginormous bubble. When that happens, I suspect the Fed will be selling to themselves and probably stepping in and buying. So I would say that they'll get through a little bit of this QT and then the whole thing would just explode. I'd be very surprised if they can pull it off. Jax, you asked, do I remember what caused the 2018 capitulation? It seemed that sellers were exhausted and then an extra 50% down. Yes, I do actually, and I remember the words of the wise doc where he said, you're looking at this big descending triangle, and he goes, there's such thing as a triple bottom, a double bottom. There's no such thing as a quadruple bottom. And then back in 2018, we managed to set I think it was 5 or 6 lows. So when I look at that, that's just sheer lack of demand. Right, we just didn't have any momentum. You can see that each bounce that came off that $6,000 level had less and less juice, and eventually the whole thing just capitulated, and that was just the end of it. So my view is that it was just purely, I don't think the sellers were exhausted. I think the buyers were exhausted, which is why we saw that continued deterioration of the bounces. And, we had a 5 quintuple bottom, and ultimately those things simply don't break to the upside. So I think that's my my main answer to that one. Strangers navigate. Yep, you go.
So no, I was just going to say, just thinking a bit more on what you said about DAOs. Do you mean? Don't you think that there's sort of like? I mean, I don't like a lot of DAOs out there, but I do think as DAOs go, probably Decred has the best model that could be replicated in the future. That sort of could, going forward. Don't you feel that there is a place in the future, though, for DAOs? I know they're very rough around the edges and they maybe need a lot of fine tuning. Do you see there a future for those, as in like the way the world's going with, robotics, or just like a robot company that sort of like helps, making decisions, and or even, with Decred spending the money? Don't you think? I think it's a major breakthrough for them being able to, the money is spent. It's transparency, how much money is there. It's spent from the decisions of the company, the people making the votes. I think I really feel that there's a massive sort of a future there to be had. I know it's not exactly correct at the moment, but do you not feel that, or are you sort of seeing, when you're saying you're going a bit bare on negative on DAOs themselves, are you obviously seeing something different there?
No, I agree with you that Decred has probably the best system, and I think when it comes to a DAO, I would actually go so far as to say that Decred is the only use case for a DAO, which is essentially a governed version of BTC, right? Governed version of a store of value / money. And we've seen that the ability for it to build out the technology and the hard fork mechanism, all these things are very, very powerful. Now, where I talk about when I say I'm bearish on DAOs is any company whatsoever. If I had even a single leadership role in said company, I don't want a single guy off the street buying a token and then thinking that he has a say. It's just, the more I think about it, the more it's pure insanity. Why would you ever want the public to have a single word into what goes on? It's the same reason that you have in companies. I mean, most people will delegate their votes, right? Or they go through Vanguard or whatever else. And the ultimate reality of this situation, we're seeing it with Ethereum. People want to delegate. In fact, this is a huge problem with Ethereum's 2.0 implementation. And they talk about on that podcast. They initially tried to make the validator set distributed so that people would stake it separately, right? What ended up happening is people chose that they wanted to go to Lido, or they wanted to go to Coinbase or Kraken and have somebody else do the hard work for them. The exact same concept is completely valid with DAOs, right? You've got people who just simply don't want to have a say. And then you've got people who do want to say but really shouldn't be speaking. So when you combine those two things, why on earth do we want to give these people a vote or a say in any way, shape, or form because they invested $1,000? And granted, their $1,000 is meaningless in the grand scheme of things, but eventually all of this capital will consolidate around either the VCs that fund it, someone who steps in and buys it, whatever it is. Ultimately, the decisions are going to get captured by the party that has the most money, in which case, just run it like a company. Why would we introduce the inefficiencies of a DAO when you're going to end up in the same position anyway with shareholders and whatever else? Now, what I am more bullish on is actually just running these tokens as equities, actual equities in the protocol, right? If we think about Uniswap, if Uniswap had have just done a security token offering, then it would be able to give dividends on all of that trading volume, and it would have the same voting and sharing rights as everyone else, as we see in companies, and the little guy still wouldn't have a say, but at least it's equity in a company that can actually pay dividends. If that was the case, DeFi would have probably sprung back and would probably be all over. It would probably be orders of magnitude higher than where it is. The problem is that these tokens are completely and utterly useless. They will never ever, I mean, I actually am quite bullish on, in this next cycle, actual security tokens. And when I say that, I mean a security token for a protocol, a Uniswap that has an actual token that's regulated and released. I see that as being a genuine pathway forward here. And then you just have shareholder voting rights, which you could argue is a DAO. But again, just having these kind of valueless governance tokens, optimism's like, oh, this is an experiment in governance. No, this is an incentive because no one was using your damn platform and you wanted to compete with Solana. I mean, that's the reality of it. And one of the first, what one of the first proposals was that came in on the Optimism forum, and I just happened to be poking around. One of the first proposals is, let's swap out the gas fee from ETH to OP. So people have to burn Optimism token to use the Optimism platform. It's like, okay, I mean, are you just another blockchain now? You don't need ETH. Just be your own blockchain. Just be a Polygon. The only reason that people shill Polygon from the ETH community is because they're all insiders who had a huge bag of Polygon given to them back when it was Matic. So that's the only reason that they say, oh, Polygon is good for Ethereum. It's crock shit. Polygon's a completely separate blockchain that does nothing for Ethereum. It actually consumes users and activity from that network. But because all of the bankless bros got equity in the Polygon token, that's why that's been allowed. But anyway, that's a big roundabout way of getting to the point that DAOs, why on earth would you allow anyone in? Even if you did allow anyone in, capital concentrates. So just run it like an equity, and thus you get to the conclusion, just run these things like equities. There was a question further up that I was going to say. Shima asked strategies to navigate stock market and hedge cold storage. This is a very good question. So my view, and again, my overall strategy is actually fairly simple, to be honest. I mostly dollar cost BTC, especially down here at these prices. I see it as I'm more than happy to watch paper value go down. And cold storage is, to me, I'm buying that BTC for my future self. So I actually don't particularly care what the price is too much right now. In terms of the stock market, so I did sell I'm mostly long various commodities. I sold a little bit of stock just so I've got like actual dry powder the other day. But that's about it, right? I didn't sell most of my portfolio. I didn't sell my gold. I didn't sell my miners. I sold one of my commodity stocks that I put on just as a trade. And I've essentially sold that to be dry powder and just sit there and wait to see what happens. To be perfectly honest, to navigate the downside for me at least, because that's all I can really speak to, my view is actually just preparing and having the capital, whether it's via income or just selling things I don't particularly care about. I think commodities are frothy, Dom. I think that's exactly why I sold some of that. I'm holding my gold miners because if I sell them right now, I'm going to lock in yet another loss, and that will be like 3 strikes I'm out, and then I just have to stop buying them. So if I don't sell them, I don't get the 3rd strike. But anyway, my view on surviving the kind of downside from here is actually stacking cash and waiting for the moment to deploy it. So the way I'm actually looking at it is there's a buy opportunity coming and I need to be ready to act when that happens. That's actually the way that I'm treating this this current downside. In terms of hedging things, to be honest, I don't really have a great tool for that, and I also think that we've kind of done a lot of the damage. But my view is that it depends what your time horizon is. So I don't particularly mind a few paper losses between here and now, because my view is that they are going to have to debase the currency to get out of this anyway. So we're going to get there. In many ways, I'm essentially focusing more on securing income and securing dry powder. Spending less money. We're going to head back to Mexico, so I'm cutting down my living costs. They're essentially the strategies I'm using at the moment. Selling things I don't care about, having the dry powder on the side, putting my income aside ready for the dip, and lowering my current life expenses. That's essentially my strategy at this point in time.
Yeah, I think that's a key for having cash on. Is a time to have cash on the side at the moment if you can. Do you mean? And it's like we're dry powder just to like. And I totally agree with you. I think what we will see over the next 6 months or a year, whenever it comes, I mean, these will be generational buys. So hopefully, do you buy into any of this sort of like doom and gloom of like, we're heading for a major depression, or would you think this would be just a short, sharp recession, or where do you sit on the timeline of the world recovery and the global slowdown?
It's a good question. My view is that whenever they stop putting the money in, right, which essentially is what they're doing right now, as soon as this unwinds, at the end of the day, if we really think about this, the amount of debt that's in the global financial system, it has it on life support, right? When it goes, it probably will be the depression, the big one. The question that you're actually asking is, do I think they can kick the can? When this finally happens, do I think they can kick the can? And I think they can, but obviously everything comes at a cost. So the bigger the monster that you're fighting, the more power that you're going to need. And they are going to need to print an absolute shitload of money. And it's going to make 2020 look like child's play. And unfortunately, what comes after that is they're going to need to print even more. We are in the exponential phase. Now, again, there's going to be curveballs left, right, and center here. I think Luke Groman probably sums it up best. He's basically saying that they are going to have to print into an inflationary spike. As a result of that, inflation is going to get hotter. And then what they're going to have to do is give people stimulus to like cost of living checks, which we're already seeing. We're seeing it in the UK. We saw it in Australia. I suspect we'll see it in the US as well. They will probably do stimulus checks to pay for people's lives whilst they print the money to do so, which creates the inflation. And you can suddenly see that we move to a universal basic income system. Whether it's by accident or not, I don't know, but this is probably what's going to happen. And then you just enter the world of the infinite. And eventually they just have to cap yields. I think even Luke was saying there is a scenario where they just have to let inflation run at like 400-500% for like 2 or 3 years and just get it over with, right? Band-aid it. And I think that's what Arthur Hayes says in that paper above. He basically says there is a possibility here that corn just goes from, 80K to $1 million and just goes straight up. Gold goes to 10, 20,000. So look, and this is why it's important to just understand the mechanics and survive this period, because it's going to be tough, right? It's not going to be an easy straight ride. And it is important to kind of make sure that you're not going to blow up, secure your income. Don't bet the farm on anything. Make sure that you've got some cash on the side to just get through if anything gets tough. Essentially, I think the generational buy will come, and I don't think they have any other choice. So they can kick the can, but they're going to have to keep kicking increasingly hard, and it's tough.
Exactly, because it could be, we could be in for a few years, or just a yo-yo, isn't it? A lot of volatility as it goes, goes into, they need to print loads of money, then loads of inflation, then loads of, they're trying to stop again, and they might try and keep this game going a few times before it sort of really collapses. Nobody knows. That's the problem. But yeah, very very hairy but very exciting sort of macro time to live through. So we will see. But yeah, like you say, I know a lot of people who are already suffering at this sort of level. Do you mean? So things it feels like there's going to be a lot of things breaking, or people sort of, there's not a lot of people who can keep going at this level with food prices the way they are, just petrol prices the way they are. There really are. There's a lot of people it's really affecting on a daily basis of making differences between choosing what to eat and what to use their car or heat or go out, or it's already coming to people that you wouldn't have thought, like middle class people. Do you mean, or sort of people you would have thought even that would never have had to worry about those sort of things. But it's definitely when it's affecting those sort of people, that the people even on a lower income must be suffering even more. I sometimes look at the price and just think, how the hell can the average person, afford these things? Do you mean? But it's pretty crazy already. But it's going to get worse. Right?
Yeah, it is sad, and it's tough. This is kind of the nature of the beast, though, right? This is unfortunately the system the central banks have built and created. So it's going to be tricky, but really the goal is to survive this. There will be generational opportunities inbound. The goal is just to make it through, don't blow up. This thing will recover. The more I think about it, BTC is just so well positioned, being an asset that you can hold outside the financial system. There's a lot of constructive stuff that's going to come from all this. But the goal is that, most people don't understand that you have to go through the ups and the downs. So that's kind of the play here. I can see here you're talking about uranium stocks. I agree. I think uranium and nuclear is kind of the next big phase. I don't know how to invest in it from Australia, but there's definitely opportunities there for people who are willing to do the hard work and really study these spaces. But in terms of stocks and equities and things, we're going to shift back towards value. Right, so companies that really are throwing off cash, producing high margins. This is why I can't sell my gold miners, because whilst gold is shit, gold miners are just printing money. Their profit multiples are absolutely insane. The dividends are extremely good. So sure, the price goes up and down like a yo-yo, but they make money in terms of dividends, and eventually people are going to go, gee, these businesses are throwing off free cash. And at some point in time, that gold price is going to start ripping, and that'll be the time. But anyway, I think that pretty much captures all the questions for today. Thanks as always for tuning in. Hopefully it's useful, but we'll navigate through this. It's a challenging time, but it's also fascinating at the same time. So we keep learning, keep paying attention, and we'll make it.
Very good. Thank you. Thanks a lot for all the questions and your thoughts there, chat mate. Cheers for that. Much appreciated.
Thanks, folks. Cheers.
Take it easy, everyone. Good night.